Hello, folks. Thanks for tuning in to TD Talks. I'm your host, Fiduciary Investment Advisor Taylor Davis, and this is today's market commentary here on Friday, January 23rd, 2026. So this week in the market was a reminder that headlines still matter, even when fundamentals remain largely intact. Markets moved back and forth throughout the week as investors reacted to a mix of geopolitical, global policy discussions, earnings results. Volatility picked up at times, but direction ultimately remained constructive, in my opinion. One of the more unexpected sources of this market chatter this week came from renewed geopolitical talking points around Greenland. While not immediately tied to corporate earnings or economic data, the discussion stirred concerns around strategic resources, defense, global influence. In my opinion, markets were less focused on Greenland itself and more focused on what it represents, which is uncertainty. And uncertainty always creates short-term movement from what I've seen. At the same time, global leaders gathered in Davos, Switzerland, bringing renewed attention to trade, energy security, artificial intelligence, and global growth. Markets tend to listen closely during Davos week, not because policies are set there, but because expectations are shaped. If you can tune into any one event and you can hear the President of the United States, you can hear the Treasury Secretary, you can hear Jamie Dimon from JP Morgan Chase, a couple cabinet members from the White House, global leaders from the World Economic Forum, probably going to tune in and pay attention to how they're talking about the present and the future. This combination of geopolitical noise and global dialogue kept investors cautious at times during the week, but cautious doesn't mean fearful, not always. Now let's turn to earnings, which continue to matter far more than the headlines over the long run, in my opinion. This week saw several companies report results that beat expectations. On the surface, that should have been a clear positive for stocks, but Intel is a good example. The company reported earnings that came in better than expected. Revenue trends show improvement, and guidance suggested stabilization, and yet the stock fell. Why? Because investors shifted their focus from the quarter that just ended to longer-term concerns about manufacturing execution and capital spending. In CNBC terms, this was a classic case of good earnings, tougher questions. In my opinion, Intel's reaction this week highlights something important. Markets are rewarding clarity and confidence about the future, not just short-term beats. This dynamic showed up, across the market. Stocks that beat earnings but raised strategic concerns often struggle to hold those gains. Stocks that delivered steady results and clear direction have fared better. Now let's talk about the broader market performance. For the week, major U.S. indexes experienced ups and downs, but ended roughly flat to modestly higher overall. There was no runaway rally, but there was also no breakdown. Year to date, markets remain positive. Gains have slowed compared to last year's pace, but the trend remains intact. So in my opinion, that's a healthy reset. Markets are recalibrating expectations, not reversing direction. But, here's the bigger takeaway. This week was not about one headline or, one earnings report. It was about how markets process uncertainty. Geopolitical discussion creates short-term volatility. Global forums like Davos shape narratives, and earnings confirm or challenge those narratives. Markets spent this week shorting through all three. Sorting through, what do they mean? What's the future? What's the present? If we look at the past, okay, maybe the past quarter was good, but what's the future look like? From a long-term investor's perspective, this is not a signal to jump in and act aggressively. It's a signal to stay disciplined, in my opinion. Think of it like steering a large ship. You don't change course because of one wave. You adjust only when the destination changes. In my opinion, the destination has not changed. Economic growth continues. Corporate profits remain resilient, and markets are functioning normally, even amid all this noise. Greenland and EU tariffs, and then that's rolled back, and We still don't know all the details of the Greenland deal, but I'm sure it'll come out here soon. Weeks like this can feel uncomfortable in real time, in the moment, but they are often the weeks that separate patient investors from reactive ones. The key lesson this week is that markets are becoming more selective, more analytical, and less forgiving of uncertainty. That's not bearish. I'd say that's maturing behavior. So as we close the week, the message is straightforward. Headlines may drive short term moves. Earnings quality drives long term value, and discipline remains the most valuable asset an investor can have, in my opinion. So that's today's TD Talks market commentary. Thanks for tuning in. You can subscribe on Apple Podcasts, YouTube, and Spotify. See y'all soon. The views and opinions voiced in this podcast are solely the views and opinions of Taylor Davis and do not reflect the views or opinions of any other entity or organization. The content provided is for informational purposes only and is not meant to be specific investment advice for any individual. Please consult with your financial advisor to address your unique circumstances. Taylor Davis does not provide legal or tax advice.